Hello, everyone, and welcome to today's informative webinar, Protecting Financial Services Organizations in Today's Threat Landscape. My name is Dan Chicoine. I'm with FNTS, and I will be today's admin for the webinar. A few housekeeping items before we begin. Today's session will be more of a fireside chat format, meaning our presenters will have more of a conversation amongst them versus formal slides. Feel free to ask any questions using the questions tab on the right-hand side of the screen. We'll save time at the end of the session to answer any and all questions. This webinar is being recorded, and we will make the recording available afterwards for all attendees as well, in case you miss any of the session or would like to send to a colleague. With that being said, I'd like to introduce today's subject matter experts. First up is Jeff Weeks. Jeff has been with First National of Nebraska for over 23 years and is currently the Senior Vice President and Chief Information Officer for FNNI Holding Company. FNNI is the holding company of the largest privately held bank in the United States, First National Bank of Omaha. The executive leadership and oversight provided by Jeff in the development, management, and execution of information security for First National of Nebraska ensures the company's ability to posture and protect all private, personal information and assets of the company's clients, employees, and business partners.
Thank you.
Welcome,
Good
Jeff.
afternoon.
Next up is Don Pekka. As Senior Director of Information Security at FNTS, Don executes highly effective and balanced information security programs for clients that securely enable businesses across the technology landscape. He also ensures regulatory compliance, risk management, and high-level performance when implementing these programs. Welcome, Don.
Thanks. I'm glad to be here.
All right. And with that being said, Don, the floor is yours.
All right. Well, good afternoon, Jeff, and good afternoon, everybody that's here. So, Jeff, as our security, threat research, and active monitoring showcase, they're both like new attacks as well as the tried and true repeat attacks and that are focused on the financial services sector. So why don't we discuss the top threats that we're seeing and kind of a high level how we go about protecting against those?
I would definitely say in the financial sector that the number one threat, and it's been that way for a couple of years now, is definitely ransomware. You're hearing a lot of attacks on ransomware against the financial industry. You know, it really boils down to, you'll hear a lot of people say you need to air gap your data, get it away, protect it. Well, air gap's kind of a thing of the past. I don't think anybody wants to go back to the big robotic tapes and arms and all that kind of stuff. But there is ways to air gap virtually. Just make sure, keep your data protected. Put a strong posture in place to detect and check against ransomware coming into your organization. The other ones, it's the number one question I get all the time. One of the what keeps me awake at night. Nation state attacks are huge on the financial sector. Here at First National, probably 90% of our attacks on a daily basis are from nation states, China, Russia, North Korea. Credential stuffing is another big attack we're seeing on the financial side. Account takeover used to be really big where, corporate account takeover, people come in and try to take over an account and put in a fraudulent wire, ACH. We've kind of see that go by the wayside now with the implementation of the multi-factor with the, SMS codes and email codes and all that, voice codes coming into place. And then I think, the last one that we're keeping a really close eye on is the Internet of Things. Everything now seems to be connected to the internet. And with that, the refrigerators, the thermostats, garage door openers, all that kind of stuff. The last thing those vendors are thinking about is security. They're just really wanting to put it on the internet where you can access those devices from anywhere. So that's one thing we're keeping a close eye on.
And that's important to note for even corporations, because as we put in lighting systems, as we put in different telephony systems, as we bring in different devices into our office space that are connected, as well as the distributed workforce now working remote has these in their own home, and some of them have microphones that are on that are listening for commands, that have command and control infrastructure already built into them to report back certain activities or to do ordering. And those can easily be used or leveraged to glean information from the corporation, whether they're listening to somebody in their home or in their
I agree. That's
where they
the
think
big question I get all the time is who's more at risk, the corporations or the people's homes? And I put it exactly at the same level. I mean, somebody comes into your home, there is a PC on your network at your house somewhere where you do all your financial transactions, your tax returns, pay your bills, all of that it's really a gateway into your home network or your corporate network. I get a lot of people will be like, well, my refrigerator's got internet access and I log onto that and it's a smart fridge, so I don't see what the risk is there. Well, most of the smart fridges today are, you can configure them to say, if I get below a gallon of milk, automatically order it from the grocery store and have it delivered to my house. Well, what people don't realize is how you paying for that. How's your fridge paying for that? Somewhere along the way, you put a credit card number in that fridge. So it's not that they're after whatever the bad guys are after what's inside your fridge, but they're after that credit card you put on the fridge. And that goes across all the Internet of Things devices.
And the information coming out of CISA, out of the government, is that they're just now starting to talk about regulatory governance of those types of things for the lifespan or for an X amount of years. But just so everybody understands, today it's a wild west out there. And unless you understand those vendors and what their abilities are, you just don't know what you're getting. Jeff, going back to your comment on nation states, so they're pretty subtle. And when they come into the network, they're not necessarily looking to steal data like a ransomware person or to take over an account. They're more looking at a long-term presence. So what do you think some of their objectives are?
I think when they're coming in under the radar, you hit the nail on the head there. They want to infiltrate a network and build a little area where they can live and just sit there and watch what's going on for months, if not years, and just gather intelligence about your corporation. See what's going, try to better understand your security posture, your network, how it's laid out. They're very patient. I mean, they'll sit there for months, if not years, just gathering information about an attack. And then, one morning at 2 a.m, you're going to realize that, somebody's attacking you from the inside of your network now. And it's those guys. But you're right. They're not really coming after credit cards or, NPPI anymore. They want to really create chaos is what they want.
And that kind of leads me back to the first topic, which was ransomware, which is much the same. So here it's really about your data. They are going to come in, and in many ways, ransomware has kind of destroyed people's idea of how long hackers live in the network. Because once a ransomware team has already stolen your data and is prepared to actually demand for the ransom that they're going to negotiate, they've basically short-circuited the time that we used to think that people in the network by announcing themselves and saying, now I expect you to pay something. And oh, by the way, if you don't pay, I have all your data. So it gets back to the integrity of your data, understanding that your data is encrypted in every stage of the operation so that even if they exfiltrate it, it's useless to them. And they really now all they can do is leverage the fact that your systems are encrypted, but they can't embarrass you or otherwise try to take you out with the data that they've actually stolen and they're using to expose you.
Yeah, that's a good point. They're definitely going to come in and they're going to want some money. They're going to ransom your encrypted data to offer you a key to unencrypt it. Then be ready for, they've probably already exfiltrated your data outside of your organization. So after you pay the ransom to get the key to unlock your data on-prem or your systems, then's going to come an extortion on, hey, we have a copy of your data. Would you like to pay for us to delete it? Now, if both of those you're protected against, you're right. They're going to create chaos. They're going to start looking to embarrass you. They're going to bring your systems down. Your websites won't function. It's more of a reputation hit then to your customers going, wow, my bank's been offline for a week. What's going on? Start, building that chaos around your customer base. But yeah, the ransomware is pretty sneaky with what they're doing there.
Yeah, and there's a little nuance that some people are still trying to grasp in that they come in much like a nation state actor and they basically watch and they record and they poke around and they're learning about your financials. They're learning about how you operate. At the end of the day, they want to learn how much you can actually pay. They want to hurt you. They don't want to destroy you necessarily because they might want to come back and double dip later. So they want to know what you're capable of paying. So in a good faith way, when they come to you, it's really a negotiation.
Yeah,
It's a
you're
business
right.
for them at the end of the day.
Right now the stance from the FBI for the financial sector is we don't pay ransom. But it's really up to the company. But the FBI stance is you don't pay ransom. And I get that. That's our stance here as well. But it's, you got to think, you got to remember you're dealing with a, less than honorable organization that's hacking you. So who's to say you're going to pay that ransom and you're going to actually get a key that works, or they're just going to fall off the grid and leave you locked? Worse than that is, they do give you a key, and you get all your systems and your data unencrypted and back up and running. Chances are really good that they've placed some back doors in your network, some time bombs in your network that are going to go off in a year, or still going to grant them access that you don't know about. So the key thing to remember there is if you have ransomware, they've been on your network. So it's not, you may be focused on the ransomware and there's like 15 other things going on in the background that you're not aware of because all your attention's on the ransomware.
And then, the other side of this is they're going to leave some infrastructure behind unless you have been able to remove it. And then as another group comes along later, say a nation state actor, they'll take advantage and leverage that same infrastructure and the same information they left behind, which will take them and get them further along faster because they have all the tools and the paths and the infrastructure to continue following. So it gets back to really having a good baseline on your security, good knowledge of what's good and bad. How important is it for foundational security?
Well, I think everybody should start with a baseline for cyber and information security. It's kind of what I call the security 101 stuff. You need a firewall, you need a well-managed, a well-updated firewall, you need intrusion prevention systems, you need endpoint protection. You need that's really a baseline. I mean, if you think of the baseline 10 years ago, that was like, okay, maybe a smaller firewall and antivirus was your baseline. Not anymore. You got to start getting into your artificial intelligence, machine learning systems for a baseline. These guys are getting smarter by the day. It's really, you got to have a philosophy around, protection, defense in depth. We operate under the belief that, they're going to get through our first level. It's really our second, third, and fourth level that we want to trick them on, stop them, We use honeypots. We steer them places where they think they're into a production environment. Takes them usually 5 minutes to figure out they're not really in a production environment, that they've been put in a honeypot. But you know what? That 5 minutes is valuable to me because now I've learned what attacks they're trying. And our intrusion prevention and our posture and all that can update itself within those 5 minutes. So it's really, defense in depth, have a strong program in place, strong, mature program. Key part of that is awareness. I mean, you need to make your employee base aware of what's going on, what controls you have in place, what tactics the hackers are using. I mean, the more, I'm an open kimono guy in the security sector. If I get another financial sector or even a non-financial sector entity call me and want questions about our, what am I doing here? What am I doing there? I'm open kimono. I'll take all the help I can get and I'll provide all the help I can give. It's just, that's changed from the ways of old. It's us against them now. And the more us, the better we are.
Yeah. Real quick, I want to touch on, you mentioned basically honeypots, which are deception technology. And the benefit of deception, for those that aren't aware, is that deception gives us an opportunity to basically see the attacker before they can get embedded in the network. So you see them when they first come in because they're clicking on or they're operating in an environment that you've basically targeted to alert you that somebody's opening documents, getting into things that they shouldn't be getting into, trying to access areas they shouldn't. And that gives you a quick alarm to say somebody got past our perimeter. They're now trying to get in the network, and it gives you an active opportunity to root them out. That's a critical new tool set that we have to leverage as security professionals if we want to be successful, reducing the time that people are in our networks, which is still ridiculously long.
Yeah, and a lot of honeypots, they'll buy you 15, 20 seconds. But in the cyber world, that 15, 20 seconds is huge, especially if you have artificial intelligence, automatically machine learning, updating systems, and the more they see, the smarter they get. I mean, one of the key things I see is you need to, especially, I'll say around ransomware, we'll use that as an example, but it's really anything, any attack you can think of, is you really need a playbook in place. I mean, if ransomware were to hit your company, you need to have a playbook that you can go to, because the last thing you want to do is start designing and inventing your reaction plan in the middle of it. I mean, that's just not going to work. I mean, here at First National, we have a very extensive ransomware playbook, and we exercise that probably 2 or 3 times a year, all the way up to the board level, to where that's the group activated on communications to our customers, law enforcement, the media, employees. So we rehearse that quite a bit, and I cannot emphasize enough the importance of rehearsing a playbook. Just don't put one in place to check a box to say, yeah, here are my regulators, I have a playbook. You need to learn that thing like it's the back of your hand.
Yep. So that's going to lead us over to cyber insurance, which is another hot topic today. So I wrote a blog with our First National Insurance Group last month. And one of the things that we learned is that companies need to be prepared for their insurers. Due to the increased business cost of the ransomware, the theft of the sensitive business data, the insurance premiums are increasing from 50 to 200%. And this is up from the 20 to 25% that we were seeing throughout 2019, 2020. So the insurers are becoming more strict. They're becoming more selective. So they may not even underwrite you. And then they're definitely becoming more expensive. So let's talk about how you became a close partner with your insurer, how you showcase your controls, your maturity over time.
Oh, you bet. That's a great question.
Keep your underwriting costs down.
If you think back 8 years ago, 8 years ago, cyber insurance was kind of something new coming out there. And it was really, companies needed cyber insurance. The insurance carrier would give them a 1-page document to fill out. And it was pretty much yes or no. Do you have AV in place? Do you have firewalls in place? Do you have a program? That kind of stuff. I can tell you, we fill ours out annually. And I can tell you the one I just did a couple months ago, it was upwards of about 55 pages. And it's no longer yes and no answers. It's like, attach this for proof, documentation, show me you have a data loss prevention strategy in place, and tell me what tools you're using, and show me some examples of how it worked. I meet with our insurance carrier annually. I actually go sit down with them and all their underwriters for our policy and have to explain and present my security program posture and provide documentation. I mean, ransomware's killing the insurance industry. I mean, they're just paying out ransoms. And when ransomware started, it was 10,000 here, 20,000 here. Now it's 10 million, 20 million, 30 million. So they are, at the beginning, they wanted as many clients as they could get around cyber insurance. And now I can tell you, they turn away more than they take, because they're not willing to take on that liability of a company that doesn't have a good cybersecurity program. I mean, I can tell you, the more mature you are, the more documented and the more robust defense in-depth cybersecurity posture you have will directly correlate with the cost you have to pay for your cyber insurance.
Yeah, and you think about the the ways that the ransom, when they're paying those out, they're just paying, all you're hearing is what the cost of the ransom is. But behind that is the reputational cost, the cost in the stock, if you're a public traded company, or the confidence of your board. In many cases, there's questions around the executives and whether or not they should stay on because that was allowed to happen under their watch. Some cases, you're paying for different controls for your consumers over a period of time to protect them from theft. So there's all these added costs. And then a lot of the equipment that cannot be recovered has to be replaced. Because some of the machines, when they're encrypted, things happen to them that aren't expected, that people can't explain because of what the encryption does, or when you try to unrun it. So there's just all these costs behind and under the covers, and then the litigation that can go on for years. So these costs are well beyond what we hear in the public, and that's why the insurance.
Yeah, that's a good point. All we really hear is about the ransom that's being paid. So, if you think about it, if you have a $30 million cyber insurance policy, and you're hit with ransomware, and the ransom is $25 million, that's going to happen quick because you need that key to unlock your systems, get back up and doing business. So there's 25 million of your 30 gone. Now what I kind of call the real excitement starts is the communication with your customers, recovering the systems that were damaged, the PR around it, the forensic investigations you're going to have to pay to come in because just to make sure there's not a back door or they left something behind that's going to, and you're going to go through that in, a blink of an eye, and then you're going to realize your cyber insurance is gone. And now you're paying out of the company's pocket. So,
and maybe another important component to that is we're kind of just moving around a little bit here is the third party and the third to fourth party, because a lot of these ransomware attacks are coming from people that you trusted to provide different either utilities to you or offerings to you or services or even protection to you. So really, what we're seeing is from the regulators and examiners is deeper investigation, even from the insurers of, do you have your third-party due diligence? Do you have your fourth-party due diligence wrapped up? And are you doing really, not just doing your due care and pulling in reports, but are you doing your due diligence by reading it and then acting or asking active questions of your vendors to make sure that you understand what is and
that's a good point. One of my key programs under information security here at First National is our vendor management program. And you're right. It's no longer, hey, here's my question, you answer it, and you take a quick look and file it away and check the box for the regulators. But you need to now take a deep dive into how they answered it, question them on things that don't make sense. Because, you can put the strongest posture in place and you got a third party vendor that you're not being diligent about, that ransomware can come through them. I mean, heck, they could sell you a circuit board or something like that that's got ransomware embedded on it. So it's really extending all the way out to your third and fourth parties now.
For sure. All right, this is an interesting one to me. Being heavily involved in banking for a number of years like yourself or financial firms. And this is around the cybersecurity assessment tool that the FFIEC basically gives us to test our maturity and test our controls. One of the things that I think people probably need to understand is the CAD is really a tool to assess your maturity over time, as well as the completeness of your controls. And the better the relationship that you have with your Fed, OCC, FDIC, or state examiner, the better and more clear or visible you are with them about the narrative around your controls and how you're maturing year over year, and being able to showcase that is really going to be important to have as in your back pocket. Is that not true?
The CAT, it's kind of a double-edged sword with me. The CAT, first of all, the regulators will tell you it's voluntary. So I tried that one year and said, I don't have it, it's voluntary. And I had a finding published against me. So even though they tell you it's voluntary, it's not. I value the CAT. It's really, if you have a strong, mature, well-established program, filling out the CAD is a piece of cake. So it's really, you're really taking a look at your posture and just providing them a quick snapshot of it. Where the CAT really becomes valuable is, smaller organizations. And it doesn't just have to be financial sector, credit unions or retail shops or, even a pizza shop or a small restaurant. The CAT is worth filling out if you want to get a really good feel for what your baseline is on security. I mean, I think that's where it's really valuable. I kind of put it up there with PCI. If you're a payment card industry certified person, as long as you have a strong program and posture in place, you will meet PCI requirements. Same thing with the CAT. You will meet the CAT requirements. So it's really where I caution people is don't rely on the CAT or PCI or something like that to build your security posture. Make sure you have posture in place that will meet those regulatory requirements. So.
Yep, but something I want to add is that if you're a bank that hosts your core or certain aspects of your wealth management or different services with a service provider, there is now a service provider specific CAT that is a little more robust, designed specifically for that service provider hosting multiple entities or multiple lines of business for you. So after a couple of failures of those service providers, they came out with this to assess their relationship into your banking business as well, or your financial services business. So being aware that is there and how to ask for that and how to leverage that for your risk management practices.
Yeah, guys, I want to make it
to basically.
I think it's real important to mention, in the past, it's always been, I have the auditors coming in or I have the regulators coming in. You need to change that mindset. I mean, I value the auditors. I value the regulators. They're the big question I get once in a while is like, who's watching? I'm watching everything. Who's watching me? So like I said earlier, I'll take all the help I can get. I would rather have an internal auditor or one of our many regulators come in and call out a weakness in my program and posture than the bad guys. So at least then I have a chance to fix it before I start showing up on the Wall Street Journal. So that's a whole shift in mindset. I know it's harder, it's easier said than done, but you really need to build a good relationship with your regulators and your auditors around your cyber program, because the more eyes, the better.
And it goes both ways too, just helping you to be able to articulate your security program, because when you've gone through and be able to articulate and showcase and describe it to the regulators who think in risk and business risk terms, in financial risk terms, now you can turn around and have a conversation that your financial, your CFO, your board are going to understand, because you're talking more along the lines of the business risk, governance, and how they view risk appetite and risk profiles. So it just makes all that. If you extend that and have that mindset, it helps you in multiple avenues of your job as a security executive.
It's a two-way street for us and our regulators. We have served in the past as a training ground for the OCC and the Fed, to where they'll send their auditors to look at our network security and help train their auditors on network security. That's a two-way street. They're learning from me, I'm learning from them. But the valuable part is, these are regulators that are going to come in and regulate me and audit me. Now they've learned my network. They've learned my posture. It just makes the relationship going forward a lot smoother, a lot more beneficial for both areas.
Agreed. All right, now I think we'll change to basically, Jeff, you know how to talk to the business. You know how to build relationships among the board and the executive, and you know that this is critical. So there's an understanding around security that we have failed in the past about not understanding the business, not understanding how to show value if we want to be trusted, and not understanding the importance of having a seat at the table. So we're learning we have to be educators and to keep security and risk conversations relatable.
Yeah, I
How
think
do
the
you
key
go
thing
about
for me is
doing this?
relationship building. I, I've built the relationship with our executive level. I've built the relationship with our board of directors. If you think of the CISO 10 years ago, that was really, I hate to say it this way, but it was a glorified firewall administrator. You know, they were probably 8 levels down from the top of the house. That has drastically changed in the last 5 years. So right now, the CISO is truly a C level. And to be at that C level, you really have to have a seat at the table. I mean, you have to show value add to the business side of the house. You know, instead of being the guy in the past that would say no and just walk away, you've got to now speak their language, a language they understand. Don't go in there and start blasting your cyber acronyms and all that kind of stuff, because they'll just, fog over. But you got to be able to speak the business language with them, relay your message in terms that they will understand, um, and prove that you're a value add. One of the things I always get people that'll hit me here, executives will be like, "Well, you're not a cost revenue generating cost center. You don't make any money for us." And it's like, yeah, I agree with that, but I'm a cost protection. I protect the revenue that the bank makes. So I think I'm a little bit better than that. I'm just making sure all the money you made stays here and you're not wasting it on ransomware and cyber attacks and all that kind of stuff. But I think I can tell you the key thing for me is having a seat at the table, being able to hear the strategy of the company, the executives, the board, see where they want to go, get involved at the beginning, raise some red flags if you have to at the beginning, rather than at the end when it's, we got 2 days to go to production. That's when you don't want to be, that's when you're going to get the black eye. So, and I know it's getting more and more companies are looking at CISOs, they're elevating CISOs. I can tell you guys, I've been on the board of directors for FMBO for the last 4 years, and it is paid off huge dividends both in my world and for the company. It's allowed me to get in there, have a seat at the table, listen to the strategies, find out where the company's going, what I can do to protect, better help enable them to do what they want to do in a secure manner.
And that's a very important distinction you just made, securely enabling. So we're not a department of no anymore. We can't be. And you underscored the need to not only have a seat at the table, but then you have to take that knowledge that you gain at the board level in those executive conversations and go talk to those business units. And then that helps with that shifting left that you talked about. So now rather than be the person crying out at the end, wait a minute, this product isn't secure, you can say, hey, we were just in the board meeting. We heard that you're doing this strategy. We heard you're putting this product line out. You're going to be doing this new line of business. Let's have a conversation about how we can do that securely, how we can reduce the risk to the organization, knowing that we just had that conversation on the board about what risks they're willing to take to grow this business. So you have to be a consummate relationship builder, but then you also have to be a trusted partner with the business, so they understand your objective is to help them to get to the finish line and to do it in a way that
that's
keeps
a good
the
point.
business protected.
You need to come across as the trusted partner. You need to be accepted as a trusted partner. You need to provide valuable input into them. It's like you said, the days of old are gone, and where it was like, well, we can't do that. It's not secure. We don't say that anymore here. It's like, you know what? That's not a secure way of doing this. Have we thought about A, B, C, and D? There's always options around it. I mean, especially in today's world, with all the new innovation going on, the new fintechs popping up everywhere, everything's about making life easier and simpler for our customers. I get that. But I can tell you one of the most innovative groups here at First National is the security department. Because for us to secure all that great innovation coming in, we have to get innovative ourselves. It's no longer, we're going to put this IPS in place and watch what you're doing. It's, we're developing code. We're right up there with the fintech developers, sitting with them side by side, making sure when they're writing a line of code, that it's secure. So we're trying to bake it in at the beginning point. I have a couple security people that are just 100% dedicated to our innovation department. And that way, again, it goes back, security's got a seat at the table for our innovation department. They're hearing the strategies, they're seeing what's going on. So they're partnering with them at the beginning to make sure all this new innovation and artificial intelligence, machine learning, AI, all that kind of stuff is being done securely or thought about securely at the incubation stage of this stuff.
And to take a little diversion from that, what we're learning through all these discussions with our peers and the fact that we're sharing information now, and with the sheer rapid pace of acquisition by security firm of another security firm of another security tool of another security tool. Before we were just, we had to react to the industry, and now we're getting enough intelligence with the sharing that we're doing to be able to take the vendors to task and say, this isn't what we expect. This isn't the value that we expect from you. You're not providing a partnership. And how has that changed our relationship?
Yeah, I think a big shift happened in the last 5-6 years around that. And it's more, I used to always tell my people, we're the boss with our vendors. We're the customer. So we get to treat them, they have to meet our needs. So it's I tell my people, if you're just think about this when you're dealing with a vendor, it's just like you're writing a check out of your own personal checking account. I mean, if the guy's going to tell you it's $200 to get your tires rotated on your car, and it'll make your car drive a lot smoother, and you get in your car and he says it's $500, you're not going to pay that. But then you get in the car and it's not smoother, you're not going to accept that either. So it's that mindset of, you really need to hold them to meeting your requirements and make sure they follow through on that. So, but it's really good. On the swing side, it's really helped a lot. There's definitely a different relationship now with our vendors. It's more of a partnership than hey, I'm just going to buy some widgets from somebody out on the internet. It's like, it goes back to what I said. My most important thing is build a relationship, sit down with them face to face, tell them what you require and what you expect of them. And I understand it's a two-way street. I mean, you can't go to them and say, I want it for $1. You got to they got to make money too, but they got to meet your needs along the way.
Yeah, and the really interesting thing that I saw bear from all the fruit from this is that the value-added resellers, the VARs, basically said, we don't want it because we're in the middle of this. We're the ones getting these bad, these calls that you're irritated or the partnership's not working. So they're actually partnering with us now to do bake-offs of tools where we actually get to see these tools in head-to-head real-life comparisons that we set up and stage. And at the end of the day, that allows us to get a better product and to actually get a vendor that's very aligned with our philosophy.
Yeah, that's right. I mean, you think about the days of the old, right? Where it was like, hey, just kind of trust me. Our product does do this. Don, you and I we're trust people, but we're big trust and verify people. So I'll take you at your word for it, but you're going to follow up and show me. You're going to prove it to me that it works. And that's a great, that's why I have a couple security partners here that all my vendors have to go through them to even bring something to the table here at the bank. It's because my partners are on my side. They know my security program. They know my posture. They know what fits best. They'll do the bake-off for me. So it's no longer a kind of an allegiance to this vendor, or I've always done business with this vendor. It's, we look here every year. We do an assessment every year on, do we have the right vendor products in place? And we work with our security partner on that. So it's a big shift.
Yeah, and the big shift also has been, just like the cost in cyber insurance went up, the cost for all of our tools went up 20 to 25% year over year the last couple of years, which, we all shook our heads like, where's the reasoning for this? Because they spent the last 5 years making all these acquisitions and trying to integrate them, and now they're trying to basically recoup that cost on our time.
We've, through telling them to prove what they say to us, has brought to light some less than accurate statements. So you're right. They have to go back now and fix this stuff, and now, which is going to cost them money, and now they're trying to recoup. I mean, the other thing that I'm seeing that just, if you're out there doing research on the cloud and all that, cloud this and cloud that, cloud is cheaper. Well, I haven't seen it yet, because now I've gone from on-prem licensing, perpetual licensing, to an annual subscription. And you hear from them now, it's pretty much anything going from perpetual to subscription, almost planned for a double cost on that. So it's, sorry, hit a nerve there on that one. So.
And it's the same concern we have with our companies going to the cloud, is that we still own the responsibility for the data and the users and the rights and the administration. But now that information that we used to have on site, on-prem, that we could control, is now existing in this vendor's cloud. So we go back to our third-party vendor management again and fourth-party vendor management again. You can't get away from them. You actually have to get really competent at them, because now you're having to figure that out in the cloud with each of your vendors that has a cloud hosting, that you're very sensitive telemetry that's going out to those about vulnerabilities or instabilities or things in your network that you want to have a chance to remediate or to fix or to harden before somebody discovers it. And now you're putting that out there in somebody's cloud.
Yeah, and that's very hard for people like you
have to trust that they're secure.
Trust and verify
that data's.
So, giving up control of a little of some security around data and the crown jewels and all that's a leap of faith. But I've built relationships with our cloud providers, and and it's not just hey, answer my question. It's like, hey, come to town. We're going to go out to dinner. We're going to talk. We're going to go through this. By the way, bring this with you so I can see. It boils down to relationships. You got to get. I'm a gut guy, so if I can see somebody face to face, I usually get a feeling in my gut whether it's going well or it's not. So, but yeah, you're right. It's a leap of faith to give up and trust somebody outside of your organization to help secure and protect your data. But I don't want people to take me wrong. I mean, cloud's a great thing. I mean, you can secure the cloud. It's just got to be done properly. I mean, again, validate, trust, and verify. If they tell you they can do this, have them prove it, show it to you. So we use a lot of cloud here at First National. We're big in the cloud. So, and I'm comfortable with it. I use a lot of my security products are in the cloud now. So it can be done properly.
Yeah, just have the awareness that each of these public cloud providers have very unique security tools embedded, but they also have a different thought process on how they do security and what they offer. And then some play well with the tools that you want to bring in, because most of the time in security, you want a secondary tool to vet your initial findings or to give context to things that you find. So being able to bring in your own tool sets to layer on top of whatever they have is critical, as Jeff just stated. It's just having the awareness of that cost that's there for you if you're going into the cloud. And
that's a good point. A good example here is, we have a multi-factor platform that we use for our customer base, our employee base, all of that. And one of our cloud providers wanted us to use their native multi-factor and actually offered it to us for free at no cost. But that's avoid that trap. We just stood up and said, no, we're going to use our existing tool that we've been using for years, and thank you for the offer, but you're going to have to support our tool. And it went that way. But just avoid those pitfalls. Remember, if they're going to throw something out there for you for free, it's probably going to be for a year or two, and then they'll hit you with the contract.
Yep. Well, I don't really have any thoughts in closing. I don't know if you have anything you want to throw out there as a last bit of advice or tidbit. Otherwise, I think we can.
Yeah, that sounds good. I'll just reiterate real quick. My big, relationships are huge in the cyber. both inside the company and outside the company. My philosophy is really treat everything like somebody's watching what you're doing, which is not a bad thing. It just be aware when you're doing certain things like, hey, if somebody saw me if I'm putting in a password to my online banking, if somebody saw that, I probably wouldn't like it. So let me make sure I'm doing it securely. But you know what, if you're on ESPN looking up the football scores at a hotel and you think, okay, somebody sees this, I don't really care. So that's my way of triggering whether you think about security or not. So
And I really encourage you, if you don't have those executive connections today or executive board connections, start connecting to business people that have those connections and getting to know them and actually offer to help them, because there's things you can do to help make their jobs easier, because security and risk impact everybody. And by having those relationships, you can move yourself up and you'll start to understand the language of your business, the concerns of your business, and how to approach those to the executive
yeah, it's very
level.
valuable. They're going to
That's
learn
my
a lot
tip
from
to
you,
offer.
but you're also going to learn a lot from them. So
Yeah. All right, Dan.
Well, very informative. Thank you very much, gentlemen. So we do have some questions here. Let's go back to the cyber insurance we were talking about. So Paul's asking, with the new FTC safeguard rules, many partners are asking for our company to fill out documents stating if we have cyber insurance. As a company policy, we don't provide this information. How do you recommend responding to these requests? Are we overly cautious, or should we properly respond?
well, that's a great question. It's kind of really boils down to your company stance. If you don't want to provide that kind of information, then that's your stance. I would ask kind of why. What do you see as the risk with providing that information? And there may be something specific with your sector that makes sense. So I'm just like here at First National, our vendors, our customers, all that, they ask us if we have cyber insurance. We will tell them yes. Now, we won't get into details, the limit of coverage, the amount, what we pay for premium, stuff like that. But we do come out, and since we have it, we do let them know, and we do kind of market and advertise that we have cyber insurance.
Yep. And from the FNTS side, we get asked that same question. And basically, we will have an attestation from our legal team that says, yes, we have an underwritten policy from this vendor. It has coverage to these amounts, because typically the question is, and this is contractual, we expect you to have X, Y, Z of certain coverages, and we have to verify. Initially, it might just be, yes, we have these, but then they have the right to come in and audit that later on to ensure we have it. So if you have an NDA with that organization and you feel they're a trustworthy organization, the NDA is strong, and you only provide them a very high level of, yes, we have it, these are the caps that we have for coverage for certain areas, that's should be about all you should offer them. That's all they should need from a due care
If our
or
people
due diligence
need,
perspective.
if the requester of us needs more details, it's usually come on site and let's meet face to face and we'll talk about it. So, but we do have one, we use the SIG, which is kind of like the standard information gathering tool. We just put one statement in there around our cyber insurance. That way we make sure anytime we relay a response to that question, it's always the same.
Great. Don, this one's probably more for you. You guys had talked about the cloud earlier. Here at FNTS, we have a public cloud and a private cloud. What's the difference is one more secure versus the other, or how do you take that approach from a security standpoint?
You approach security the same regardless. In the private cloud, we build foundational security, and then we layer on any regulatory concerns or additional security considerations, say from an insurance perspective, that company we're contracting with as a customer has an obligation to receive from us. From a public cloud perspective, you really have to weigh what you're putting into that, what workload, or what type of application or service are you providing via that public cloud. And then do they have security stacks within that public cloud that are mature in that space for those types of workloads, for that type of activity? And if not, you have to supplement those. And the beauty of it, we're able to come in and actually tell you from having built out private cloud, this is what you would do to leverage that same technology to get that same level of security in the public cloud. And having customers across the regulated industry and in different industries, we're well versed in the differences and the nuances of those different types of business and regulatory requirements, if that helps you.
Yes, great. This one's for both of you. Jeff, you had mentioned earlier about, people in the company say security spends money, we don't make money. What is there an industry average of what percentage of a company's budget is being put
You
towards
bet. That's a
security
great question.
today?
One I get all the time. I can tell you in the financial sector what the majority of us use. We have an FSISAC, which is Financial Services Information Sharing Advisory Council. It's made up of lots of financial set companies, in that's kind of our big conference who we look for benchmarks, things like that. And they have come out and they've used it probably for the last 10 years. And they're saying a good judge of your cybersecurity budget is if it's within 8 to 12% of your overall IT budget. Now, that number does fluctuate. It used to be 7 to 11. 2 years ago, it jumped up with all the remote workforce and all that kind of stuff. So they adjusted that to be 8 and 12. So if you're less than 8% of your overall IT budget, you're led to believe you're not spending enough on your security. If you're, 15% of your overall IT budget, then you're led to believe that, you're kind of overspending on your program. Now, there's outside factors that can play into place on that. If you're installing something big or, a new multi-factor platform or something like that, then you are going to take a hit for a year. But overall, the average is right around 8 to 12% of your overall IT budget.
Excellent.
And I think what you'll find is that a lot of times the CIO, CTO will want to partner with you because there's certain things they need. There's things they need to do for the business, objectives they have that they need your help to solve or your help to manage. So you always look for those opportunities because then you can extend your budget into those departments.
Right. We try to push off as much security cost to the business unit that's requiring it if we can. I mean, if it's, if it's an enterprise-wide thing or all that, then it comes into my budget. But it's, you got to keep in mind if you're going to go 8 to 12% of the overall IT budget, and IT is going with a big initiative, like say they're going to migrate to the AWS cloud or the Azure cloud, that IT budget's going to go up probably, 40, 50, 60%, which means your cyber budget is going to fall right in line with that and go up 40, 50, 60%, because no matter, and that meets everything across the enterprise. I mean, if one of our lines of business is going to do something really big, then we still got to secure it. So we're going to get in there and, help them move right along with them. So there will be a lot of fluctuation, but yeah, the 8 to 12% is what we really stand by here.
And notice Jeff said, move right along with them, not come in after the fact, because that's where security will lose every time. So that's why you want that seat at the table. So you're there early in the business discussions and you can embed the need to have the proper funding for the proper level of risk reduction, the proper protections, and make sure that that's the accountabilities are where they need to be to ensure that happens. These are critical conversations to have way early.
Excellent. All right. Well, that's all the questions we have in the queue. Again, I really want to thank Jeff and Don for taking the time today. This has been very informative. Lots of learnings have come out of it. On the screen here, you'll see Jeff and Don's contact information. They'd love to connect with you on LinkedIn, answer any follow-up questions you may not have thought of until afterwards. We'd love to be there and help answer those. And then we'll also send an email out with the recording afterwards to everybody who registered, and their contact info will be there as well. So thanks again,
Thank you.
and have a great day, everyone.
Thank you.